we're back on Morning Trade Live. Here is the latest price action for the tech names that are reporting earnings after the close. It's going to be a big afternoon. We've got Adobe, Oracle and Synopsys. And so this is the price action. We've got Synopsys lower by about 0.5%. Oracle is doing a similar thing. Obviously, there's going to be a lot of questioning around the CDS spreads there and whether they can reassure certainly the markets about that, particularly given the blockbuster number that we got out of the company with future contracts last quarter. Adobe is just on the line to the upside, so certainly waiting for some direction from that report. Let's go inside out on Adobe right now. Joining us is Keith Kirkpatrick, a research lead at Futurum. Thanks so much for joining us, Keith. So what are your expectations for Adobe? It just looks like investors are looking for some direction from that report given the price action right now.
Absolutely, and thanks for having me, Sam. So I think investors are going to really be taking a close look at how is Adobe actually monetizing AI. Obviously, if you look at what's been going on in the market, there have been a lot of challengers that are trying to provide AI for both things like content generation, as well as the actual production of content across that whole content supply chain. So what we're really looking to see is how is Adobe actually being able to go out and drive and derive revenue from their AI services? And I think we're going to see that. I think that Adobe has had a good story. I'm not sure whether it's just this irrational fear of investors that Adobe's lunch is going to be eaten by some of these competitors. What I think they're not really kind of taking into account is Adobe's bread and butter are these large enterprise customers who are looking for a platform-based approach. Adobe actually announced some news over the past several months where they're making other models available within their own platform. So that really, to me, that gives me a lot of confidence that the company is actually going to be able to execute on its strategy.
Okay, yeah, Keith, but it's one thing to monetize, but part of the conversation that we've been hearing about, and actually Jim Cramer made the point earlier today as well, is that they need to lower their prices. So, they might be monetizing, but, you just wonder what that's doing for margins if, they would have to lower their prices because, he was making the point that people don't want the Lamborghini, they want the Ford here. Do you see that?
I think it's really going to depend on the market segment that you're looking at. If you're talking about large enterprise customers, I think they're going to still be willing to pay a premium for really, you're not just buying the technology, you're buying a company that has experience working with these very large customers. You're paying for the fact that, if you're talking about things like content generation, that the material is safe to use in a commercial setting. You're not going to be violating IP rights. You're not going to be running into any kind of copyright issues. Certainly at the lower end of the scale, yes, Adobe has always faced pressure from other companies that offer their product on either a freemium basis or on a lower price point. So I think it really depends on the market segment that you're looking at.
One of the lines we've seen out this morning is an announcement. They're actually going to be integrating ChatGPT into Photoshop here. I'm just wondering, what significance that has, how you're sort of tracking those lines.
Sure. Well, actually, it's I believe they're actually making Photoshop, Express, and Acrobat available through ChatGPT. They're really doing a couple of things here. They're saying, okay, if you want to work with their tools within their platform, that's great. We're also making other models available within Adobe's platform. But they're also saying, hey, we realize that people are operating using other tools like ChatGPT. So what they're going to do is make their services, their creative tools available in the tool where users feel comfortable working. I think it's a great way to really address this big issue that we're seeing across the software landscape is letting people work where they're comfortable in the application, where they feel that they can get as much done as they can. So I think it's a great move.
Okay, Keith, and just lastly, obviously you want to see how they're monetizing AI, but what is the key number, the key metric that you're looking at, the meet or beat number, the one that's really going to be a standout and that's going to drive markets and the price action?
I think it's really going to, look at what is going on in terms of Firefly. What kind of revenue are they deriving from Firefly? Because it really does kind of stem from how are their models, are we seeing growth in the utilization of their models moving forward?
Okay, looking at Firefly Services, you're saying it should be the first and foremost looking as we get an idea of how they're continuing to drive revenue there.
That's true.
We'll be watching. Thanks so much for the update and the preview for us, Keith Kirkpatrick there, research lead at Futurum. Appreciate your time. Let's trade it now with Tom White, host of Fast Market. So an example trade for Adobe for us this morning, Tom.
Yeah, Sam, implied volatility elevated going into this report, to say the least. The bar is really low. The stock's down over 50% from its all-time highs that we hit 4 years ago. Remember, they were one of the big winners when NVIDIA came out, with the AI chips, right? Everybody thought Adobe was going to be able to take advantage of that. So it's pulled back over 20%. It's in bear market territory. So the bar is really low. The option market pricing in about a plus or minus 7% move either way in the shares, about $24 either way. So I looked at a strategy. If you think the bar is low, you think it's going to rebound a little bit, this strategy takes advantage of it, and it takes advantage of the vol dispersion between different option series. So I looked at going out to the December 19th monthly options that expire in just 9 days. We're going to buy a call that's at the money, the 345 strike call. And then against it, we're going to sell in the near term December 12th weekly options that expire in just 2 days. We're going to go about that one standard deviation and sell the 370 strike call. So a bullish $25 wide call diagonal. You're going to pay roughly about a $10 debit for this call diagonal. So that's less than half the width of this bullish call diagonal to the upside. So the idea here is the stock goes up about that one standard deviation. That's where the max profitability is. You can see here from the risk profile, at or near that 370 level is going to be max profit on this type of trade. Anything above about 350 is going to be profitability on this one. So you do need a small percentage move to the upside to start seeing some gains on this trade. But I mentioned that vol dispersion that you're taking advantage of here. So out in that December 19th option series where you're buying the 345 strike call, you're buying about a 67% implied volatility on aggregate. And then in the near term December 12th weekly options that expire in just 2 days where you're selling that 370 call, you're selling about 116% implied volatility. So that dispersion really lowers the entry point price. You got $1,000 in risk on this per trade, but that can more than double if you get that move up towards 370. But as I mentioned, on this type of trade, you only need that move to the upside. Now, this is a bullish call diagonal. If you think the stock's going to rally post earnings, about that one standard deviation. If you're more bearish, then you could do the put diagonal on this one. It's about the strategy due to the fact that we've got that dispersion between the implied volatility levels between the option series.
Okay, Adobe shares under a little bit of pressure just over the last few minutes or so as we look ahead to this key earnings report. Looking for monetization on AI. Thanks so much for getting us across the example trade for us today, Tom.